Hello everyone and welcome to this video. I am Faiz Khan, the founder of EduHorns. EduHorns helps accounting students to pass their exams by making difficult concepts very easy to understand. So in this video, or this series of videos is working through the November 2020 grade 12 accounting exam papers. In this video, we'll be working through paper 2 of November 2020, question 4, stock evaluation. So I'll be working through this, answering it, and while we answer, we will explain the concepts behind and how to think through these type of questions so that you can handle any stock valuation question of this nature that comes your way. Okay, so let's jump straight into it. So the question has, it is 35 marks for 30 minutes. It has just basically, yeah, so just have these 4.1 and 4.2. So I'm going to read through the question and then we'll be answering it. I'll use Google Sheets to answer it. If you wanted, you can just email me at info@eduhance.co.za. Eduhance is spelled EduHance. Okay, thank you. So let's get straight into it. So let's say give one word or term for each of the following statements. Write only the word or term next to the question numbers. So 4.1.1 to 4.1.4 in the answer book. So there you can see the terms that the words or terms that they're giving us is periodic system, is first in, first out, is perpetual, is specific identification, is weighted average. So what you must understand, periodic system and perpetual system, those are costing systems. Okay, so it is costing systems, inventory costing systems. So with the periodic system, what happens? The periodic system, or let's go rather with the perpetual. Let's start with the perpetual, then we come back to the periodic. So periodic and perpetual system are costing systems, inventory costing systems. Okay, so the perpetual system accounts for inventory at every inventory transaction. So whenever you buy inventory, it will calculate, it will, we will say debit inventory account and then credit either trade payables or bank. So every time we buy, we impact the inventory account. Okay, when we sell, we decrease inventory immediately. So what happens? We would say credit inventory. So for every credit, there must be a debit. Where does the debit go to? The debit goes to cost of sales. So with the perpetual system, the word perpetual just means continuous all the time, right? So with the perpetual system, we impact inventory and we impact cost of sales at every transaction. So when we sell, cost of sales is updated. When we so for cost of sales, when we sell, cost of sales is updated immediately. For inventory, when we buy and sell, inventory is updated immediately. Whereas with the periodic system, we do not touch cost of sales. We only calculate cost of sales at the end of the reporting period. For our purposes, the reporting period is the end of the financial year. So we only calculate cost of sales at the end of the year. So when we buy inventory, we don't take in the purchases to inventory, but we rather take it to a purchases account. When we sell, we don't impact any, we don't impact the purchases account, we don't impact the inventory account, we don't impact cost of sales. So when we sell, nothing happens to the movement of inventory. We only do the calculation at the end of the year. Okay, so so that is basically the periodic system and the perpetual system. So basically it's just how we deal, how we account for inventory and cost of sales. So with the perpetual system, inventory is updated every time there's a sale or a purchase. For cost of sales is updated every time there is a sale. Whereas with a periodic system, inventory and cost of sales is only updated at the end of the year. And when we buy inventory, we don't take it to the inventory account, we take it to the purchases account. Okay, so that's important. Then you can see FIFO, specific identification and weighted average. FIFO, specific identification and weighted average, is a costing method. How much do we allocate to inventory? How much do we allocate? So how much do we allocate to closing inventory, and how much do we allocate to cost of sales? So with FIFO specific identification and weighted average, we try to get a cost per unit. And that cost per unit is then multiplied against the number of units. So with first in, first out, when we sell, we based cost of sales based on the earliest purchases. Okay, so for first in, first out, when we sell, we based our cost of sales on the earliest purchases. When we calculate closing inventory for FIFO, then we use the latest purchases. Okay, you will see just now. For specific identification, the terminology explains it for itself, that when we sell a particular item, we use that particular item's cost amount. Okay, so that's basically what we do over there. And you're going to see how we deal with it when we do one of the questions in this particular question for, I think it's gas stoves. For weighted average, when we make a sale, every time we make a sale, we have to calculate the weighted average. So there are two ways of doing this. One way is every time a sale happens, before the sale takes place, a weighted average cost is calculated. Okay. Or in an academic world, mostly in academic world, we calculate the weighted average cost. We will calculate the weighted average cost once, and we calculate it at the end of the year. So what do? We say opening balance plus all purchases divided by opening units plus purchase units, and we get a weighted average cost. That weighted average cost gets used to calculate cost of sales for the year. It also gets used to calculate closing inventory. So typically for weighted average cost, the cost per unit for cost of sales and the cost per unit for closing inventory is exactly the same in most cases, right? And definitely in the academic world. Okay, in the real world, it can change, because in the real world, the average cost is calculated every time a sale takes place. But for our purposes, we calculate it once at the end of the year. Whereas for FIFO, the cost per unit when we sell will differ to the closing inventory, because the closing inventory is based on the last purchases, whereas for when we make a sale, the cost of sales is calculated based on the earliest purchases. So just be able to pick that up. Okay, so let's go on to 4.1.1. So they say this method is most suitable for inexpensive goods purchased regularly. So inexpensive goods purchased regularly. So expensive goods that are not purchased regularly, we generally use the specific identification. So think about a car dealership, right? They don't sell cars often like Pick n Pay sells bread. Okay, so Pick n Pay sells bread a lot every day, right? Whereas so Pick n Pay sells bread regularly, and bread is inexpensive. Whereas BMW or Mercedes or Toyota or VW, they don't sell vehicles regularly, and it's expensive items. So at a car dealership, they will most likely use specific identification. When they sell that particular car, they would allocate that particular cost of the car. Okay, whereas with FIFO and weighted average, they'll do an average calculation. Okay, so just be aware of that. So therefore, this one over here, the method the method is most suitable for inexpensive goods or purchases regularly, that system will be the weighted average. Okay, so let's go to Excel. So we will have 4.1.1. So this is Google Sheets, sorry, 4.1.1. So we'll say weighted average. Okay, then they say the closing stock, 4.1.2, the closing stock balance is recorded at the most recent prices paid. So remember, with FIFO, closing stock is calculated using the last purchases. So that is the most recent prices paid. Okay. So this one is FIFO. Closing stock is recorded at the most recent prices paid. So closing stock is recorded at the most recent prices paid. For WAC, if you had to use weighted average, it would have been the average price. If you had to use specific identification, it would have been the specific item you're trying to calculate. So therefore, 4.1.2 is FIFO, because when we calculate closing inventory for FIFO, we use the last purchases, the most recent prices paid. Okay. Then they say individual stock items are valued at the cost price on the purchase invoice. So that is specific identification. Individual stock items. So a specific car is valued at that specific car's price. Okay. So that is specific identification, that you give a specific amount to that specific car based on that car, based on the price you actually paid for that vehicle. So take that. That is specific identification. You allocate the amount per the purchase invoice to that particular item. Okay, so that is specific identification. 4.1.3, specific identification. Then we go 4.1.4. Okay, so the last one, what do they have? So they say cost of sales is recorded for every sales transaction. So remember, this is the perpetual system. Like we explained, the perpetual system. Perpetual means continuous. Every time a transaction happens, inventory is updated for a purchase or for a sale. So every time a sale happens, cost of sales is updated, inventory is updated. Every time a purchase happens, inventory is updated. So here they are, they're saying the cost of sales is recorded for every sales transaction. That has to be the perpetual system. If I had to say cost of sales is recorded at the end of the reporting period, then that would be periodic. Okay, so that is perpetual system. Okay, so that's 4.1. That's 4.1. Okay. Now we can look at 4.2. Okay, so they say the owner is Alex Lotus. The business uses the first in, first out method to value gas lamps. So here you can, okay, they decided to sell gas stoves as well, expecting a demand due to increased load shedding. The specific identification method is used to value these stoves. So what you want to picture in your head is that you have a company called Lotus Accessories. Okay, so you have a business called Lotus Accessories. So that's the business. The business sells two items. So the business sells two products or two items. One, gas lamps, and two, gas stoves. Gas lamps is valued using FIFO. Gas stoves is valued using specific identification. Okay, so that's what you get in your head. So the picture you want to see in your head, and you perhaps want to draw it on a piece of paper, is the business Lotus Accessories. Underneath the business, so basically let me show you what I mean. I just want to share my screen. How do I share? So we have so here we have Lotus accessories. Okay, so there we have Lotus accessories. Okay, so that's what we have. That's the company. Now below this, the company has two products. Okay, the company has two products or two items that it sells. Okay, what does it sell? It sells lamps. Okay, remember gas lamps. And then it also sells gas stoves. So you don't have to draw. I mean, you can draw this. Obviously, I'm taking a bit long over here, but you can draw it really quickly, or at least picture it in your head. Okay. You want to see these pictures. This helps you with drawing basic pictures. I know we are accountants, so we may not be great at drawing. But you just want to have that. Okay, so there you can see Lotus Accessories. Lotus Accessories is the business. They have two products, gas lamps and gas stoves. Then you want to say over here, Fifo, Fifo, and then over there, you want to say specific identification. So when you see this, it will just help you to keep your head straight. Okay, so now we know. I don't know what happened over here now. There we go. Okay. So there we have Lotus Accessories. Lotus Accessories have two products or two items that it sells, gas lamps and gas stoves. For gas lamps, I use Fifo. For gas stoves, I use specific identification. That's the picture you want to have in your head. Okay, so let's share our screen again. Okay, so now we have, and they say the financial year end is 30th April to 30th April, okay, each year. So 4.2.1, they say calculate the following for the gas lamps on 30 April 2021. So what must we calculate for gas lamps? Value of closing stock, and then also calculate stock holding period in days using closing inventory. Okay, so value of stock and stock holding period in days using closing inventory. So let's have a look at the information. So they're giving us, so this is the page of information A and information A, information B. So we're dealing with gas lamps. I'm only going to read gas lamps for now. So they say stock records for gas lamps. Stock balance on 1 May 2020. So remember our financial year is 30 April. And in this particular question, our financial year end is 30th April 2021. If our financial year end is 30th April 2021, it means that our beginning of the year is 1 May 2020. Okay, so opening balance is 230. Purchases during the year is 2750. And then we can see the different purchases. Then we add returns from March 2021. And then they said available for sale. And then they say stock balance 30th April 2021. And then they're also giving us total sales, okay, in units, in unit price, and in amount. So what they want us to calculate is the following. Okay, so what do they want us to calculate is the following. So let's go back up. So they want us to calculate the value of closing stock using first in, first out. Okay, so let's have a look. So if we calculate the value of closing stock using first in, first out, we do it as follows. So we know that we have 270 units on hand. That's the closing inventory. Closing inventory units is 270. What we need to do, we will have to value closing inventory. And the valuation method is FIFO. So remember what we said in 4.1.2 is that closing inventory using FIFO is we start off with the most recent purchases. Okay, so we start off with the most recent purchases. So, or in another way, we start off with the last purchases and work our way up. So the last purchases was March 2021. Okay, we bought 220. Of the 220, we returned 40. So therefore, what's on hand over here is 180. So our closing inventory will be based on the last purchases. So we start off with March 2021. So of the 270 units on hand, 180 will be valued using 80 Rand per unit. Now remember, that's only 180 units, 220 minus 40. Now we need 270. So that means we are short still, how much? 90 units. I think 180 and 90. 180 and 90 will give me 270, or yeah, something like that. Okay, we'll see now what's the difference. So that in January, we bought 1,100 units. So certainly the remaining units of the 270 will be valued at 75 Rand. So remember, what's the approach? When you work out closing inventory using FIFO, what do we do? When we what did we say now? When we calculate closing inventory using FIFO, all we do is we start off with the last purchase and we work ourselves up. So we started off with the last purchase, which is March 2021. We realize there's only 180, 220 minus 40. So the last purchase only have 180 units. So therefore, of the 270, 180 units will be valued at 80 Rand per unit. So now we still need another 90 units. So then we go to the next most recent purchase. The next most recent purchase is January 2021. So here's a 1,100 units. We only need 90 of this. So that means the next 90 units will be at 75 Rand per unit. Okay, so let's see how we will do this. You can do it however you want to in terms of how you set it out. I'll just give you a format how I would do it since I'm using Excel or Google Sheets. I just want to see the question number 4.2.1. Okay, closing inventory, 4.2.1, closing inventory. Sorry, 4.2.1, 4.2.1, closing inventory. Okay, so we can have units, unit price, cost per unit, total value. Okay, so I'm just using the same format over here. Units, unit price, amount. Okay, so we want 270. We know you know, so you will see when you go through the solution, they do it quite simply, right? So you don't have to go through this whole formatting that I'm doing because you're not going to have that time in the exam. You're just going to do a basic calculation. I'll do that basic calculation as well, but I just want to show you how to think through it. And using this table will give you, and I will show you how you think through it. Then I'll show you how you must actually calculate it in the exam as well. This table will help you to get the numbers. So even if you don't do the table in the exam, you can use this thinking approach to be able to get the numbers for the exam. So remember, we need to calculate closing inventory. We need to calculate closing inventory for gas lamps using the Fifo method. There are 270 units on hand. So when we calculate closing inventory using Fifo, we start off with the most recent purchase. The most recent purchase was March 2021. We know the number of units in March 2021 was 220. But all the 220 units, 40 units were returned. So therefore, it came down to 220 minus 40 units returned. So we only have 180. The cost price per unit is 80 Rand. So therefore, the amount would be 180 multiplied by 80 Rand per unit. Okay. Next, now remember, we want 270 units. The most recent purchase only gave us 180 units. So that means we need to go to the next most recent purchase. The next most recent purchase is January 2021. January 2021, there were 1,100 units purchased, but we don't have 1,100 units on hand. We only have 270 units on hand. And all the 270 units on hand, we already accounted for 180. We already accounted for 180 from the March purchases. So therefore, for January, we need to only take the remaining units. The remaining units would be 270 total units on hand minus what we already accounted for from the most recent purchase, which is 180. So that gives us 90 units. The cost per unit for January 2021 was 75. So therefore, we would say 90 times 75 will give us 6750. So now we have accounted for total closing balance. So this is closing balance. You can see the number of units. The number of units is 270, and you can see the closing balance. The closing balance would be the sum of those. Okay, so there we go. Okay, so the closing balance, that's the answer. So closing balance is 21,150. The closing balance is 21,150. So how could you have done this in the exam? You could have just said 180 multiplied by 80 plus 90 multiplied by 75. So that's how you'd have written it, and then you will say it equal to 21,150. Okay, so that's how you'd have calculated in the exam, 21,150. Okay, so that's written it in the exam. Okay, then you could have told them the 180 is equal to, you could have told them the 180 is 220 minus 40, that equals the 180. Okay, so you could show them that. So basically, that's what the answer, how you do it in the exam. So I'm not just focusing on how you answer in the exam, I'm focusing on the way you would think, because in the exam they could present anything. So this is how you think through it. Okay, so we still get the same answer. My way took a bit longer, but I'm just showing you how to think through it so that you can handle any question that comes your way. Okay, so that is 4.2.1. Now let's go to 4.2.1. There was another one. They asked us for stock holding period in days. Stock holding period in days using closing stock. Okay. So closing stock holding period. Stock holding period. So a stock holding period. So stock holding period equals I just want to think quickly. Stock holding period, yeah, equals closing inventory divided by cost of sales times 365. Okay, so that's the formula, and I'm pretty sure they had the formula here at the bottom. Yeah, let me just see. Yes, so this formula over here, that is a stock holding period in days. Okay, so they use the word average stock, but they told us don't use average stock. They told us use closing stock. So that is why we're using closing stock over here. Okay, so just take note of that. So we already have the formula. Okay, so we don't need to write down the formula. I'm just writing it down so you can see what I'm doing. So therefore, if I'm going to use Excel, so we're going to say closing inventory cost of sales 365, and then that would give me stock holding period. This would give me stock holding period. Okay, so this would give me stock holding period. Now I already have closing inventory. Closing inventory is 21,150. So just so you can see where it comes from, 4.1.2 closing stock. Okay, so just so you can see where it comes from. Remember, you don't have to write down all of these calculations. You can do it quickly in the exam, but this is just for you to see where I'm getting the number. Okay, so we have closing inventory. We have 365 remains 365. That doesn't change. What we're going to need is cost of sales. So let's work out cost of sales. So remember, what you must know, cost of sales, you work out as follows. I'm just going to do this. I'm going to say calculations. How do we work out cost of sales? That's the important aspect. Okay, so the way we work out cost of sales equals opening inventory plus purchases minus returns, okay, minus closing balance inventory. Okay, so that's how you work out cost of sales. So cost of sales, how do you work it out? It is opening inventory plus purchases minus returns minus closing balance inventory. So that's how we'll work out cost of sales. Okay. So let's have a look. Cost of sales, opening 12,650, the amount. So just do this over there, amount. So 12,650, that was given. Total purchases, you can see total purchases over there, 193,500. Given 193,500. Returns, you can see here's returns. We returned 40 from March 2021. So we're going to say 40 times the price of March 2021, which was 80 Rand. So if I just do it over here, so I'll say 40 times 80. So this is equal to 40 times 80. Okay. So remember, with returns, we say minus. So I'm going to put a minus here. And then for closing inventory, we calculate the closing inventory already. So closing inventory, we already calculated from 4.1.2. So we can do that. It must be a minus as well. So now we can add up. So cost of sales is opening balance plus purchases minus returns minus closing balance. So we'll say, I'm just going to add up all of this. So cost of sales is equal to 181,800. Okay. So now we can do the calculation. Stock holding period, closing inventory divided by cost of sales multiplied by 365. So there we have okay, so it's 42.46 days. Okay, so the stock holding period, 42.46 days. How do we calculate it? Closing inventory divided by cost of sales times 365. Remember, the formula sheet in the exam paper showed average inventory. It said average inventory divided by cost of sales. But we couldn't use average inventory because the question specifically told us use closing inventory. Okay, so there we go, 42.46. So that's 4.1.2. Okay. Now let's move on to the next question. So 4.2.2, they say Alex suspects that the stock of gas lamps are not well controlled. Calculate the number of missing gas lamps. Okay, so we're still busy with lamps, so we must calculate the missing lamps. Okay. So the way we'll calculate the missing lamps is as follows. 4.2.2. Okay, so the way we'll calculate the missing lamps is as follows. We will use the closing balance. We'll use the closing. We can use a cost of sales formula. Okay, we can use a cost of sales formula, but we're going to use it in units. Okay, so I'm going to say details, and we're going to say units. So it's what you must always try to remember, this cost of sales formula. Okay, the cost of sales formula, whether you use it for any, you can, the cost of sales formula, you can use it in rand amount. You can also use it in units. And the nice thing on the cost of sales formula, you can calculate cost of sales in rands or in units. You can calculate opening inventory in rands or in units. You can calculate purchases in rands or in units. You can calculate returns in rands or in units. You can calculate closing balance in rands or in units. Does not matter. Okay. So I just want to do this. I'm going to copy this out here. Okay. So I'm going to take this out. Okay. Okay, so this is I'm trying to say, so I'm going to change this around. So just to show you the cost of sales formula again, cost of sales equals opening inventory plus purchases minus returns minus closing balance inventory. So we want to calculate closing balance inventory. So if I rearrange the equation, if I take closing balance and I make it the subject of the formula, meaning I take closing balance and I take it to this side of the equation. So that means when you take something from one side of the equation to the other, the sign changes. So minus closing balance becomes a positive closing balance inventory equals. We want everything on the other side. So opening balance inventory stays there. Purchases stays there. Returns stays there. And then cost of sales must come to the other side of the equation. Cost of sales is positive. Cost of sales is positive this side. So when we take it to this side of the equation, it's going to become negative. So then we say minus cost of sales. Okay. So opening inventory plus purchases minus returns. So let me just do that. Add less. Okay. Less. So it's not going to be closing inventory, it's going to be cost of sales. Okay. So this will be closing balance inventory. Okay. So if we go back to this, to the question, how many units was on hand in opening inventory? 230. How many units was on hand? 230. So there we have how many units was at the beginning of the year? 230 units. How many units did we purchase? We purchased 2750. 2750. How much did we return? We returned 40. So minus 40. Okay. How much did we sell? We sold 2180. So minus 2180. So what should be in So what should be on hand? Okay. So what should be on hand is 760. So what should be on hand is 760. Okay. What is actually on hand? We'll go have a look at that now. what is actually on hand. They told us stock balance 30th April is 270. So what should be on hand is 760. What is actually on hand is 270. So what is missing? 760 minus 270. So what is missing? 490 units are missing. Okay, so that's the answer. So if you go back to the question, what did it say? It said Alex suspects that the stock of gas lamps are not well controlled. He is correct. They said calculate the number of gas lamps missing. So we calculated that there are 490 missing gas lamps. Okay, how do we know? There should be 760 based on what we have bought and sold and returned. But what's actually on hand is only 270 and not 760. So 590 is missing. I mean, not 590, 490 is missing. Okay, so that is 4.2.2. Now they say 4.2.3. An investigation revealed that Alex's brother, employed at the store, orders gas lamps using the business ordering system and sells them privately to his friends. Okay, what should Alex say to his brother when dealing with this matter? Provide 2 points. Okay, so there's different things that Alex could tell his brother, but I'll just give like a few things that come to my mind. So what Alex can tell his brother is the following. Okay, so what Alex can tell his brother is his brother. So Alex can tell his brother that although he is a family member, he should follow normal company policies and procedures. Okay, that his brother could be dismissed because his brother is doing something unethical and illegal. Okay, so it's illegal from a company perspective. Okay, so those are common things. You can also tell him, you can also say his brother is causing the company financial loss while his brother is making a private financial gain. Okay, a private financial gain. Okay, also his brother could, so any of these 2 points. Okay, and you can read the solution. There may be other stuff as well. His brother could cause the company or the business to receive a penalty and fine from SARS for not paying VAT or income tax. Okay, so so basically that is what is those are examples that could happen, what could be a problem for the business, and then also the unethical behavior from his brother. So it does not mean his brother is a family member, his brother can do what he wants. His brother should follow normal business practice of the company. Okay, but you can read the solution. I'm pretty sure there's more things to calculate over there. Okay, so the last two, the last two required, 4.2.4, calculate the closing stock value for gas stoves on 30th April using the specific identification method. So closing stock of gas stoves. Okay, so here we're gonna go. So here are all the purchases. Okay, August, October, February. Okay, then we have sales, then there's a gross profit. So there's no opening inventory, it seems. There's only, so we can work out what is the closing stock. And then from the closing stock, we can work out, let me just see. So we have October, B light, okay. B light and smart, okay. So now we can work out from the specific identification, what is, how many units are on hand. Okay, so we can use the same formula. So 4.2.4, 4.2.4. Okay, so we can use the same formula to get closing inventory. So we want to get closing inventory. So I'm going to use this formula over here. So I'm going to say, so this is going to be, I can't remember, B light and smart. Okay, so we'll say B light units, smart units. I'm just going to close this. I'm going to remove this. You don't need it for this particular question. Okay. So you can see there was no opening inventory, so it is 0 and 0. There was no return, so it is 0 and 0. Okay. So what we can do, we can see there are purchases. So in August for B light there was 80. In October there was 80, and in February there was 120. So it's 80, 80, 120. So we can go over here. It is 80 plus 80 plus 120. Okay. The units sold for B light was the unit sold for B light was 132. 132. So therefore the number of units on hand is 4112. Okay. For smart units, we bought 100 and we bought 60. So it is 100 plus 60, and then we sold, how much did we sell? We sold 54 units. We sold 54 units, so the number of units on hand is 214. Okay, can't I remember what did they ask us for? They asked us for 4.2.4, calculate the closing stock value of gas stoves on 30th April using. Okay, so therefore, as you can see, for B light, the cost price is 495. For smart light, it is 700. So we were able to work out the closing inventory. Okay, unit price. And then we would go to, and this would be closing balance inventory, the value. Okay, So for B light, 495. For what's the other one now? 495, and this one was 700. Okay, so I'm gonna do this. So it'll be 412 multiplied by 495, and then it'll be 214 multiplied by 700. So therefore the total is going to be, the total is equal to 214 plus 149. So closing inventory, total closing inventory is 353,750. Okay, so that is the answer over there. Okay, let me just see if I read everything correctly. So 4.2, calculate the closing for gas stoves. Yes, okay, so that would be the closing inventory. Okay, so now let's do the last one. 4.2.5. So they say Alex thinks he should stop selling gas stoves as they are causing a liquidity problem and the profit is low. Okay, so quote number, provide figures to support his opinion. Okay, so what you can show him is the following. So 4.2.5, 4.2.5, he is correct. It is causing a so Alex is correct. It is causing a liquidity problem. Okay, why? Okay, so why? Because the stock is slow moving, and the value of the, and so the stock is slow moving. You can see is for gas stoves. Something's not right here. Something's not right. So this sales must be 132, and this must be minus. Okay, so there we go. So stock is slow moving, and a large amount of cash is, a large amount of stock is tied up. Okay, large amount of cash is tied up in the gas stove, in the stock. Okay, so what you can see, so the numbers you want to quote, okay, 147 Rand is tied up. 147,000 Rand of cash is tied up as stock. Okay, so remember the fact that he paid, he bought the stock, he only sold a few, so what is still sitting in stock is 147. That amount he paid, so that cash is sitting in, that cash he has spent, and it's sitting in trading stock. So that does cause a liquidity problem. Okay, and then you can also tell him that it is a lot of stock is still sitting on hand. So you can see here how many units are still on hand. Okay, 254 units. 254 units is still on hand. Okay, so that represents stock selling slowly. Okay, as you can see, he bought quite a bit. He only sold 132 of of Be Light, and he sold only 54 of smart units. Okay, so that's 4 point. So that is the numbers aspect. Show the numbers. Okay. Now the second part of the question said. Explain 2 points to convince him not to discontinue trading gas stoves. Okay, so you can tell him I only start this year. He only started this year to sell gas stoves. How do we know only this year? Because there's no opening inventory. So that means that that's an indication that he only started this year to sell gas stoves. Okay, he only started selling gas stoves this year, so he should advertise the gas stoves more. Okay, what he could also do, he could also reduce selling prices to increase sales, as he is making a good GP percentage. So you can see he sold the gross, his GP percentage for gas stoves is like 40%. Here you can see for Be Light it is 60%, for the Smart it is 40%. So you can see he's making a good GP, so you can reduce the selling price. Okay. Also, there will be demand. There will be demand if advertised due to load shedding. Okay, so again, I'm pretty sure there are more, but these are due to load shedding. Due to load shedding. There will be demand if advertised due to load shedding. Okay, so this is typical answers. Okay, so you can have a look, obviously, for something that is for more answers in the solution, but those are basically the various parts of this question. Okay, so what's important in terms of the numbers? When it comes to stock valuation, very important to know the cost of sales formula. Cost of sales equals opening inventory plus purchases minus returns minus closing inventory. You can use that to calculate any number. You can use that to calculate any units of those, whether it's cost of sales, whether it's opening inventory, whether it's purchases, whether it's returns, or whether it's closing inventory. So make sure you know that formula, and you can use that formula to calculate different numbers. As you could see, we needed it to calculate a closing inventory. We needed it to calculate missing units. We needed it to calculate cost of sales. Okay, so just make sure you know that. Then remember, from a FIFO point of view, when you calculate closing inventory from a FIFO point of view, what's important to take note, you start off from the most recent purchase. So we started off with March, but March couldn't cover everything. Then we went to the next most recent purchase, January, and January could cover the remaining. When it comes to the returns of units, when you return units, the cost you apply to returns of units must be the actual cost you paid it for. So in this scenario, the units we returned related to March's units. So therefore, we use the unit price of March. If the units returned related to January, then we had to use the cost relating to January's unit price. Why does that make sense? Let's say you buy units from Coca-Cola. When you return, Coca-Cola wants the invoice relating to the units you bought. So when they refund you, they will refund you based on the invoice that the units relates to. So you don't apply FIFO or WACC in that case. Returns is always based on the invoice. Because just picture yourself taking something back to the store, they want to see the invoice. So then they will return the amount based on the invoice. So that is why the returns in this question was based on March, because the returns related to March purchases. If the returns related to January purchases, we'd have to use the unit price of January. Okay, so thank you very much. If you have any questions, you can always message me. You can, so here's my details. I'll just show you over here. So you can find us, you can find our tutoring business at http www.eduhans.co.za. So that's us. You can email me at info@eduhans.co.za, or you can WhatsApp me on 078 487 4902. Okay, so that's our details. So this is website. This is that's website. This is email, and this here is WhatsApp. Change the format. Okay. Okay, so that is us. So we are EduHans. EduHans helps accounting students to pass their exams confidently. And we do this by making difficult concepts really, really easy, and also to teach you a way of thinking so that you can answer any question that comes your way. Okay, so I hope you found it beneficial. Thank you very much.